If you've been watching the market at all lately, you've probably noticed that the interest rates have just fallen dramatically. To find out why that's happened and what it means to us, I asked John Carman of Homestate Mortgage to drop by and answer a few questions. Thanks for coming, John. We appreciate you being here.
Well, thank you for inviting me. It's a busy time of year for us.
So, John, we've been hearing a lot in the news about the Fed cutting the interest rates. How does that apply to a mortgage loan?
I'm glad you asked that, Vicki, because I probably get asked that 5 times a day. It's amazing. The news never seems to get it exactly right because it's kind of a complicated subject. I guess the best way to say it is there are a lot of different interest rates. The ones the Fed particularly cuts is a very short-term interest rate. And that relates to the long-term interest rates, but not at all directly. Sometimes they can cut the short-term rate and long-term rates will actually go up. Other times they cut the short-term rates and long-term rates go down. So you can see they move in opposite directions a lot of times because there are different factors affecting the interest rate. One good way to look at it is it's like the difference between renting a room at the Holiday Inn for one night and signing a 30-year lease on a commercial building. Because Holiday Inn decides they're going to have a special and reduce their interest rates on that room for one night, you wouldn't expect that maybe a landlord would sign a 30-year lease at a lower lease rate.
Okay.
There's different things that affect those things. One is long-term inflation expectations on long-term rates, and the other is short-term market fluctuations. So they're very different things. One is the supply and demand in the short term. The other is expectation of inflation over the long term. So the biggest thing to know is nobody, I don't care who you are, Alan Bernanke or Alan Greenspan or anything else, you can't predict interest rates in the future. The market dictates interest rates. Whatever they are today is what they are today, and there'll be something different tomorrow. We don't know higher, lower. It's impossible to tell. So whenever you hear people say, I'm going to wait till the end of the month because I hear rates are going to be cut.
Right.
As far as long-term rates are concerned, there really is no way to predict whether long-term rates will be lower or higher at the end of the month. You just have to go with what it is today.
Right. And as a home buyer, you know, asking that question is, oh, should I lock it in now? Really, you just need to find a place that you're comfortable with as a buyer with your budget and do what makes you feel right.
Oh, you said it so well. That's exactly how I would say it. The rates now are historically very, very low rates. And if you're happy with the rates that they are today, you should take that rate, lock it in, know that you're good and can go to sleep at night and not worry about interest rates anymore. We have to keep doing that every day, but you don't have to every day because you've locked your rate in.
John, thanks for that great information. If somebody had wanted actually to lock in the rate as it is today, who should they be calling?
They should call Homestate at 762-5890 and we'd be happy to talk with them.
Great. Thanks, John. Stay with us. We're going to be right back after this.